Iraqi Dinar RV, a turning point in global currency markets. Welcome to Iraqi Dinar RV, your trusted destination for the latest financial news, professional market analysis, and comprehensive coverage of developments in the world of currency trading. Our platform specializes in providing detailed insights into the Iraqi Dinar, IQD, and Vietnamese Dong, VND. Two currencies that have long been at the center of investor speculation and geopolitical interest. As we step deeper into May 2025, signs are emerging that the global financial system may be on the verge of a significant shift, one that could reshape monetary policies, currency valuations, and investment strategies across the board. What's currently unfolding goes beyond the usual ups and downs of the Forex markets. It points to what could be a landmark transition in the global economy. A new development, rooted in a major leak reportedly sourced from high-ranking officials in the banking and regulatory sectors, is making waves in economic circles. If the information holds up under scrutiny, it may mark one of the most dramatic revaluations in modern financial history, centered on two currencies long believed to be undervalued: the Iraqi Dinar and the Vietnamese Dong. Unlike previous rumors that were often dismissed as speculation or conspiracy, this new report appears to stem from internal documents linked to major financial institutions. Most notably, the origin of the leak is said to be within Bank of America, one of the world's largest and most influential banking entities. Several independent sources suggest that the leaked documents detail a substantial upward adjustment in the valuations of both the IQD and VND. According to these reports, the Iraqi dinar could be revalued to $7.90, while the Vietnamese dong may shift to $4.52, figures that, if confirmed, would represent a dramatic change in the international currency landscape. The magnitude of these proposed values is hard to ignore. Not only would they represent a massive departure from current exchange rates, but they also imply a deeper, more coordinated effort by global financial institutions to address long-standing imbalances in the currency market. Analysts suggest that this may be part of a broader initiative, years in the making, to bring certain currencies more in line with their country's economic potential and performance. This development is attracting attention from across the financial spectrum. Economists, central banks, asset managers, and retail investors are all scrambling to understand the implications. Could this really be the beginning of a new monetary era? What would such a shift mean for global trade, investment flows, and economic power dynamics? Part of what gives this story its weight is the credibility of the sources involved. Reports indicate that insiders from central banking institutions and even the U.S. Treasury may have been involved in early discussions surrounding these projections. This suggests that what we're witnessing might not be a simple information breach, but rather a carefully managed rollout of new fiscal strategies, perhaps intended to realign global monetary priorities. In recent years, both Iraq and Vietnam have made major strides in stabilizing and growing their economies. Iraq, despite its turbulent past, has made notable improvements in its financial governance, banking transparency, and management of oil revenues. Its increasing foreign reserves and international partnerships have bolstered confidence in its long-term economic prospects. Meanwhile, Vietnam has emerged as a key player in Southeast Asia, with booming export markets, a tech-savvy workforce, and policies that attract significant foreign investment. Together, these fundamentals support the notion that both currencies have been undervalued for some time. Further driving this narrative is the global shift toward de-dollarization, a movement among countries seeking to reduce their dependence on the U.S. dollar in international trade and finance. Nations are exploring ways to strengthen their local currencies to foster greater autonomy and economic resilience. In this context, elevating the IQD and VND could be seen as a strategic move to diversify global currency power and give emerging markets a more prominent role. Behind the scenes, there appears to be growing alignment among major global stakeholders. Institutions like the International Monetary Fund, IMF, U.S. Treasury, and prominent global banks are rumored to have participated in strategic meetings concerning long-term monetary reforms. This level of collaboration suggests that any forthcoming revaluation would not be a spontaneous or isolated event, but part of a larger plan to modernize and rebalance the international financial system. Such recalibrations are not undertaken lightly. They require consensus among multiple stakeholders, including governments, central banks, and global economic organizations. The leaked documents are thought to reflect long-term projections and fiscal modeling typically used in high-level negotiations between nations and global financial institutions. If these projections materialize, they could signify the dawn of a new economic order, one that is more equitable, representative, and strategically diverse. The potential consequences of such revaluations would ripple far beyond currency markets. Trade agreements, investment flows, debt repayment structures, and commodity pricing could all be affected. For Iraq and Vietnam, this would be a monumental step toward financial empowerment and global influence. For investors, the implications are equally profound. Portfolios would need to be reassessed, risk models adjusted, and long-term strategies realigned. Financial professionals have already begun weighing in. While many see this as a potential turning point, they also urge caution and due diligence. The leak, though compelling, remains unconfirmed by official sources. Investors are strongly advised to consult with qualified financial advisors before making major decisions. Jumping into the market based on unverified reports could lead to substantial risk. If organizations like Bank of America, the U.S. Treasury, or the central banks of Iraq and Vietnam do confirm these projections, it would likely trigger rapid changes in financial protocols, regulatory requirements, and capital allocation. Compliance frameworks may be updated, and investors will need to adapt quickly to new realities. For individual investors holding or considering IQD and VND, the key is preparation. Organize documentation, understand applicable tax obligations, and build a flexible strategy for handling gains. Awareness, rather than impulsivity, will be the most powerful tool in navigating what could become a fast-moving financial transformation. This development also ties into broader geopolitical currents, particularly the evolving role of the BRICS nations, Brazil, Russia, India, China, and South Africa. These countries have long advocated for a more multipolar economic structure, less dependent on Western financial institutions and the US dollar. The revaluation of the dinar and dong could align with this agenda, offering alternative paths for reserve currency systems and trade partnerships. If confirmed, these shifts could represent a historic moment, one in which emerging economies are acknowledged not merely as peripheral players, but as central forces in global finance. It would be a realignment of not just money, but power, responsibility, and influence. In conclusion, the leaked projections suggesting a revaluation of the Iraqi dinar to $7.90 and the Vietnamese Dong to $4.52 have sparked a wave of analysis and speculation. While unverified, the response from financial institutions and market watchers indicates that this story carries significant weight. It may represent more than just a market fluctuation. It could signal the emergence of a new global financial paradigm, driven by recognition of real economic productivity rather than outdated geopolitical hierarchies. Stay connected with Iraqi Dinar RV for further updates as this story continues to unfold. We'll keep providing detailed analysis, breaking developments, and grounded commentary to help you stay ahead in an ever-evolving financial world.